Now let's take a look at the real estate market from coast to coast. With mortgage rates now above 7%, is there anywhere in the U.S. that a first-time home buyer can get a good deal? Here to give us a breakdown of housing markets across this vast nation as part of our week-long special, Real Estate, the New Reality, is Orphe Divounguy, who is the Zillow senior economist. Orphe, great to have you here with us on the program today. First and foremost, we have to acknowledge the affordability issue right now. What is the best place where home buyers can find a deal or some affordability in the market?
Yeah, look, mortgage rates are driving most of the activity these days, right? So in February, start of the year, we saw mortgage rates decline a little bit. We saw a big increase in the number of existing homeowners listing their homes for sale. In February, new listings increased 21% from last year. And in March, unfortunately, mortgages started increasing again. We saw the new listings metrics start to ease again. In April, first couple of weeks, we see an increase again. And so mortgage rates really driving what's going on out there. But there are markets where homeowners are less likely to be affected by the big swings in mortgage rates. Those are markets that are in places that are relatively more affordable. They're in the Midwest. They're also in Texas and Florida. They're markets where the majority of homeowners don't even have a mortgage to start with. And, great examples are, your Detroit, Pittsburgh, Minneapolis. Those are markets where, you're seeing older homeowners with no mortgage listing their homes for sale. And that's providing a lot more options for potential first-time home buyers that are out there trying to get there, on that first rung of the home ownership ladder.
Are there markets, Orphe, that are actually seeing price cuts right now from the assessment and evaluation across the board?
Yeah, it's mixed. You're seeing on almost every market we have sellers. Sellers cutting prices. Right, 1 in 5 sellers cut their price in March. But at the same time, you have some sellers actually raising their prices in expensive markets on the coast, in the California markets. Like San Jose, San Francisco. A small increase in demand can push prices up higher, because there's just not enough inventory to go around. There's not enough sellers coming on the market to sell their homes in those markets.
So for those prospective sellers that are still sitting on property right now, where are we seeing the values rise the most? Is there one region that's having kind of an outsized moment of value and ultimately seeing those values move higher at this juncture?
Absolutely. San Jose, San Francisco, Seattle, San Diego, Los Angeles are markets where you're still seeing a lot of price activity, upward price activity. And it's not coming from, a big increase in demand. It's mostly coming from the fact that, there's not enough listing activity. You don't have a lot of sellers coming on the market to sell in those markets. And so that drought, right, in inventory is really pushing upward pressure on prices. Those are markets that don't build a ton either, right? If you don't have a lot of new construction, a lot of new homes coming on the market for sale, you're just going to continue to see that price pressure. And so those expensive markets just got more expensive this spring.
Orphe, it's interesting. One of the data points that Zillow has run as well is the median age of all listings. Where are you seeing some moderation there right now?
Yeah, so we're seeing that listings are moving faster in markets that are relatively more affordable. And so if you're looking at the Midwest markets, if you're looking at the South, especially, Austin's a market that's built a lot of housing. And so you're looking at markets that built a lot of housing, homes are selling slower. They're taking a longer time to sell. But if you're looking at markets that don't build a ton, or markets that are relatively more affordable, like in the Midwest, you're going to see homes moving a lot faster. And so we just came out with that study for first-time home buyers. And if you look, competition is really, really fierce in those markets where, homes are affordable. And so, those markets in the Midwest, you're going to continue to see a lot more activity. The good news is that sellers are also coming back in those markets because a lot of those sellers don't have a mortgage to start with, and so they're less affected by the big swings in mortgage rates that we've seen lately.
Just lastly, while we have you, Orphe, it sounds like there are some major corporation moves in region and how they might be setting up new groundbreaking facilities. I'm thinking of Intel and their own construction plants, chip fabrication that they're trying to bring online. That's jobs coming to an area. I'm thinking of whatever day of the week it is, and
That's
Tesla
right.
and what takes place there. All of this considered, when corporations make these big announcements, what type of delta do you usually see in how the real estate values move in those markets?
That's right. And you're absolutely right. I mean, we saw that with the Amazon HQ too, right? We saw every time they announced something, we saw big activity, big increase in activity and home values increasing in those markets. And so, and what we're essentially seeing is firms are moving to where workers are, and workers are moving to where the jobs are. And so when our most recent analysis of mover data that we published in December really showed that ultimately what's driving the market is affordability. People are moving to places that are relatively more affordable with more inventory and a greater mix of housing options. And so workers are doing that. And so firms are looking for talent and doing exactly the same thing.
Orphe Divounguy, who is the Zillow senior economist, joining us here on the show today. Thanks so much for the time, Orphe. Appreciate it.
Pleasure to be on.
Certainly.